Hello guys, in this video I'll be discussing you the two most asked question. One is how to select strike price and the other one is why I'm using futures chart for trading. So friends, before getting into the video, I want to tell you one thing, that what I'm showing here in this video is what I am doing. It may work to you and it may not work to you. It has a slight difference from the theoretical selection of strike price. But here in this video, what I'm showing is what I was doing so far and what fits 100% for my strategy. So please keep that in mind and watch this video. I hope this will be beneficial to you, and I'll upload a different video of theoretical selection of strike price separately. But now today I'm going to show you what I do and for my trading, and it is completely based on my strategy. So now let's watch the video. Okay guys, so in this session I'll talk about how I select these strike prices. So which is very important topic. Everybody used to ask me how I select the strike price, what is the role of delta in selecting strike price and other things. So here I have decided that I'll be discussing why I choose certain delta on particular days. Okay. For example, I select 40 delta on Friday and Monday, and then 50 delta on Tuesday and Wednesday, and 60 delta on Thursday. I'll discuss these reasons and then I'll also tell you why I have traded Fin Nifty today. You can see Fin Nifty is what I'm trading today. I have not traded Bank Nifty despite we got a big move. You can see the market is so dull except these candles. So there's no trade possible in these regions. So here we can get a put side looking at this rejection because that was a previous rejection area. So you can see here a couple of rejections. Here again rejection. Look at this, this consolidation. So this is going to act as a very strong rejection area. So we will be getting a very good put trade here. So I have tried a put trade. So this is what the profit is. So let me exit this trade and then I'll discuss. So I've exited this trade and I've exited at 33 and now the time is around 3:28. Market is about to close. So I'm done with the profit of 1,10,000, which is okay considering it's a Friday. So why I have not traded in Bank Nifty today is because Bank Nifty premiums are slightly higher and I'm not getting very good moves. I'm not getting clean move. On the other side, Fin Nifty premiums are less and I'm getting very good move on that. So I decided that I'll be going for Fin Nifty and I've taken trades, put trade somewhere here. I have taken. So I was able to capture a move from here to VWAP. Though from VWAP it bounced like anything, I should have got a call trade based on my strategy where I used to enter from VWAP. But today, considering yesterday's down move and all, I was not that confident, though OI was also telling me to go on the call side. But considering it's a Friday, I decided not to take much risk. But since the price have come to this level, then I've decided that I'll be going on the put side. Now coming to strike price selection. Guys, what I normally do is I look at this spot chart for strike price selection. And for trading, I take futures chart. So this is again one of the questions that many subscribers used to ask me. So for trading, I use futures chart. I can get the volume information. Even if you see HDFC Bank or other banks, HDFC or ICICI, those futures are getting traded. So what I want to tell you is, in market, the derivatives are getting traded more than cash market, right? It is not HDFC Bank stock is getting sold maximum. More activities are in HDFC Bank futures. So Bank Nifty futures is what is getting traded and my strategy is mainly based on volume. Look at these volume dots and everything. So my strategy is primarily based on volume. So I look at future chart for trading. But to decide the levels, especially on expiry day and also to decide the strike price, I look at this spot chart. So now let's say 43,904. This is where the pre-market settlement is done by 9:08 in the morning. Then which strike price will you decide to select to trade? Mostly we'll go for at the money. At the money means the nearest 100. What is the nearest 100? Let's suppose market is going to open at 43,938 in the morning. Okay. Now assume that market is going to open at 43,938. Let's look at this. So where is it closed today? 43,938. we need to decide the strike price to trade. At by 9:10, when the pre-market settlement is done, so let's assume this is the pre-market settlement, okay? 43,938. 43,938 is where the pre-market settlement is done. So what we need to do is, we need to decide the strike price to trade. So don't look at these premiums. So these premiums are adjusted based on the volumes and other things like the average price which is traded during the last 30 minutes. So I'm not looking at this premium now. So 43,938 is where market is opening. Imagine then what is at the money. At the money means 50 delta. Okay. At the money will be the nearest 100. So if you see this one, I've taken this option chain. You can see Bank Nifty option chains. That's what I'm opening. 43,938. Okay. At the money means 43,900. So here you can see this is a call strike and this is a put strike. So call strike and put strike. So here this is at the money means this premium will move 50 points when Bank Nifty move 100 points. That is what you mean 50 delta. So delta will tell you how much the underlying means the options derivatives, how much the underlying will move based on the move in the index. So if Bank Nifty move 100 points, the option will move 50 points. If you select at the money, which means 50 delta strike price, so the strike price will move 50 points when Bank Nifty move 100 points. Suppose Bank Nifty move 100 points on the upside, call will move 50 points upside. So, suppose Bank Nifty move 100 points on the upside, call will move 50 points upside and put will move 50 points downside. And this delta will also give you the probability of winning that strike price. Both have equal probability, 50-50. Now again, if you go higher, so 43,900, next 43,800, the previous 100, that will be in the money for call. In the money means call will have 60 delta. Call will have 60 delta, 43,800. The put of the same strike price will have 40 delta. So one thing you need to understand is, here it is 50, here it is 50. So 50 plus 50, it has to be 100. Here call is 60 for any particular strike price. If call is 60, then put should be 40. So 60, 40, it has to be 100. That means overall, if Bank Nifty moves 100 points, call will move 50 points up and put will move 50 points down. So that is what 60, 40. The total movement will be 100. So, Bank Nifty move 100 points, call which is having a delta of 60, move 60 points up and put move 40 points down. Same way, if you look at this 44,000 which is in the money for puts. So, here 60 delta for put and 40 delta for call. So, 60 delta for put means put will move 60 points, call will move 40 points. Again, if you take the sum, it will be 100. Same way, if you come here, the puts will have 70 delta. So, when the Bank Nifty moves 100 points, puts will move 70 points. So, the more in the money you're going or more higher the delta you're going, let's say this is 80, this is 90, higher the delta you're going, the underlying or the derivative or the options will be similar. It will show the same properties of the index. It means if the future is moving 100 points, if future is moving 100 points and this will move 80 points, it shows huge volatility. So normally I prefer at the money because I need 50-50. That is perfect. So if Bank Nifty move 100 points, whether it is a call or put, it will move 50 points and it is perfect for me. I don't want something to move 80 points. At the same time, I don't want something to move 20 points. 20 points move is not going to reward me. I don't want to go out of the money. Even I don't want to go too much in the money also. There is one more reason why I won't go too much in the money. Let's say this is where the Bank Nifty is now. So this is in the money for call. 43,500. Let's take 43,500. I'll add here for call. Okay. Now what I look at is, if you see here, if you see the bid price and the asked price, So this is the bid price and this is the ask price. So this is the demand and this is the supply. So can you see a big mismatch between the demand and supply? This is 544 and this is 549. So normally when I enter, you can see I enter at market price. When I am entering at the market price, I am committing to the seller that I am ready to take it at your price. So in the market, when the buyers are at this level and the sellers are at this level, but I am going with the market price by committing the seller that I am okay with your price. So the moment I am entering, LTP we may see will be this one or lesser. We will be getting at 555 or 51 level. So upon our entry itself, we are losing 5 to 6 points. And that count a lot when you go with huge quantity. Even if you look at here, these orders, 1800, 1800, 1800 and you can see the quantities that I am punching. So I cannot afford to go with an option strike price which is having a big bid and ask price difference of more than 1 rupee. But I'm okay with this one. If you look at this one, you can see 186, 187. This difference is just 1 rupee. I'm perfectly okay with this. But I cannot afford anything more than that. Because upon that entry itself, I'm losing. When I'm entering, I'm losing. Then there's no point in that particular trade. So I hope you got the logic. Everybody was asking me like, isn't it for scalping in the money is better and all? Yes, in the money is better if you are entering at a limit price. And if you are entering at a market price, this is the biggest disadvantage. Look at this bid price, this is the demand. And look at this ask price, which is the supply. So supply is at this level. When you are entering at the market price, you are committing to the seller that you are okay with your price. That means I am okay with the seller's price. I don't have any demand. I am okay with the seller. So there itself I am actually losing 5 to 6 points. I cannot afford it. Even if you look at this one, you won't see that the difference, right? It is 257 and this, now there is a difference, but otherwise I look for 1 rupee difference maximum. So that is what I do on Friday. On Fridays, I'll go for 40 delta. Because expiry is over on Thursday, Friday premium will be slightly expensive and there won't be much move also. So 40 delta means, look at this 43,900. So next one, 44,000. Call, I'll select call. This will be 40 delta for call. Then 43,800 put. I'll select. This will be 40 delta for put. So I'm trading these two. But why I didn't trade Bank Nifty today? This chart itself will tell you guys. So firstly, I don't have any trade till the time they are closing R3. Looking at this very bullish candle, I don't want to short at R3. So I did not do that. And after that, we are getting a breakout. But on retracement also there is no trade and I'm not looking at a trade here because the move is very slow. The candles are not convincing and again at 100 EMA we are getting flat moves, very flat moves. Breakouts are not convincing but here only we got that good move. That is again VWAP support only. But I did not trade Bank Nifty because I was not convinced with this up move. I was not expecting this kind of short covering. So what I decided is I'll trade Fin Nifty if I get an opportunity on the downside. So I took some trades here on the downside. So these are the two trades that I have taken and made a profit of 1,10,000. So what I do on Fridays, I select 40 delta. I don't want too much premium. I need the premium which is in the range of a maximum 250 to 300. I don't want to go beyond that. Now since VIX is very low, that is the reason why the premiums are quite low and VIX is around rupees 10. So in the last 3 years, this is the very lowest premiums I have seen and this was not the situation or normally 40 delta will also cost us around rupees 300. Last year this time it was around rupees 300. So I'm going with this 40 delta but considering the logics, if you want you can go with 50 delta on Fridays, also no issue. But I go with this and Fridays I normally avoid because expiry was on yesterday. Last week also I saw 4 stop losses was getting hit. So the chances of getting trapped and the chances of getting this clean one side move is very less. So I try to avoid but I'll try to scalp Fin Nifty because Fin Nifty expiries are on Tuesday. Already 3 days are over, so premium is less. So you can see the one which I'm trading, it's just 31 and I go with the huge quantities, also made a good profit. So Friday and Monday, my strike price will be 40 delta or 50 delta maximum. Now considering VIX is low, you can go with 50 delta. So I hope you understood the reason. So spot is here, 50 delta means the nearest 100, which will be moving 50 points when Bank Nifty moves 100 points. That's what you mean by delta. So delta also tell you the probability of closing this at this level. It is having equal probability. Both have equal probability of winning. Now, when you go lower, what I mean by in the money for call, let's say Bank Nifty is trading 43,900. Anything less than that, 43,800, 43,700, 43,600, all these are in the money. So less than that will be in the money. So previous 100, 43,800 will be first in the money. 43,700 will be the second in the money. In that order, you will be getting 43,800 will be 60 delta, 43,700 will be 70 delta, 43,600 will be 80 delta. Like that it will go. The more in the money you will go, the character of the derivative will be the same as that of the underlying. What is underlying? Underlying is the Bank Nifty. So what is derivative? That is the option. So this option will start behaving similar to the underlying when you go more in the money. Let's say 90 delta. 90 delta means when Bank Nifty move 100 points, options move 100 points, which is similar to like buying a future. So we are buying a 90 delta option is almost like buying a future. So more in the money you go, the premium, the option strike price or the derivative will behave more like or the character will be similar to underlying, which is Bank Nifty. I hope this is very clear now. Why I am not going too much in the money? This is a question everybody was asking me. Why I am not going too much in the money? I have already answered. That is the big difference between the bid and ask price. So I am not okay to go with this difference because in my case, I always go with market order. If I am placing a limit order, I am willing to buy if the price comes to let's say 450 and I am waiting. Then I'm okay with, any in the money options. But for scalping, the moment I see the opportunity, I try to grab it. When I see this kind of rejection at this level, immediately I should take the action, right? So you know that this level you'll get rejection. So this is the level which is marked already. You look at this level, look at this level, so which is already marked. And when you see this kind of huge wick there, you should be taking an action immediately. So that time it is not possible for you to enter on a limit price. You need to go market price. Even if you see my orders, all these are market price only. So that is the reason why I go maximum 50 delta or expiry days I'll go for 60 delta. Because expiry day I don't want to take risk with out of the money premium. 60 delta I'll go for 60 delta. So guys, I hope this is very clear to all of you. So Friday and Monday, I'll go for 40 delta. 40 delta means, let's say 43,950 is where Bank Nifty. 43,800 PE, previous PE and next CE. Because previous CE will be in the money, next PE will be in the money. I'll go for out of the money on Fridays and Mondays. I'm okay with the out of the money on Fridays and Mondays. It's not too much out of the money. It's just one step out of the money, 40 delta. I'm perfectly okay with 40 delta on these 2 days. Because especially if you consider Friday, the limit, the time decay is very less. So we can hold it also. Tuesday and Wednesday, 50 delta. I'll go for at the money. Okay. And if it is Thursday, I'll go for in the money. So let's say Bank Nifty is at 43,930. Then in the money means what I'll go for either 44,000 on the put side and I have to go for 43,900 on the call side. Or 43,800. I'll go in the money. So when I'll go in the money, that's on Thursday expiry day. But how much in the money? Just 60 delta. Don't go beyond that. Because if you go more in the money, what will happen? The premium or the options will behave like futures. the derivative will start behaving like the underlying. What is underlying? Bank Nifty. So when Bank Nifty moves 100 points, the options will also move like 90 points. If you're selecting in the money, strike with delta 90, but it's better to go with 50. 50 delta is always good. 50 maximum 60. Also, the reason for I'm selecting this particular range is because I am entering at market price. This is the difference I cannot afford to take, because upon my entry itself, I'm getting a difference of 5 to 6 points and I'm trying to capture 20 points. So here itself, I'm losing 6 points. In exit also the same thing will happen. In exit, I'm the seller, right? I am the seller. So when I'm exiting, that means here I am the seller and someone want to buy from me when I'm exiting, isn't it? So I'm committing the buyer that I'm okay with his price. You take it at your price in that way. So in the entry, I'm getting this difference. Exit also, I'm getting the same difference. So entry, I am losing 6 points. Exit also, I'm losing 6 points. To 12 points has gone. And I'm targeting 20 points. So at the end of the day, what will I get? So that is the reason why I don't go too much in the money. So I hope this help you a lot. And why trading? Looking at the futures chart, because this is what getting traded in the. It is based on this only most of the algos are set. For example, 200 EMA rejection or 20 EMA rejection. These are what traded in the market. So volume will be here. So you can understand volume and everything. But if your strategy is volume based. My strategy is completely volume based. Whatever happened before is what I'm looking at. Where the volume was there. Is it on the buying or selling side? Based on that only, I'll decide. Why I have not gone on the call side in the morning despite these moves? It's flat move. It is very difficult to trade till this level. You won't get anything. Only here you will be getting that short covering. So there is no trade here. Why? Firstly, because volume was on the selling side. And there's nothing convincing to go on the upside here. Only here we are getting the volume. But once it comes to that rejection level, that rejections are also coming with a very good volume. And these two set of candles are also with very good volume. Okay. So guys, I hope this video helped you to it might have helped you to get some idea about selection of strike price. And again, I'll tell you, it depends on your strategy. It's not that you have to select only this strike price always. It's not like that. Guys, what is thumb rule? Thumb rule is always to select at the money, be it any market, at the money. Because 50-50 is the probability. So take at the money, 50-50 delta. It also gives you the probability of winning that strike price. So 50-50 is the thumb rule. But for scalping, many will tell you, for example, one of my mentors used to tell that go for 60-70 delta. But for me, even if I follow the strategy and setup and everything, I won't follow that, because we need to understand what is our strength and our weakness and what we are and what are the benefits we'll be getting. And you have to decide which strike price you have to go with. So based on my nature, my style of trading, and I have to go with the strike price. So that's it guys. Thank you so much for watching, and I hope this video helped you a lot. So thank you so much and see you in the next video.